IncomeLux.com Income streams, worthy bonds. Best for beating inflation without stock market risk. Investment to passive interest income. Interest income, income tax rate. As a business founder, I know two things. 1. Getting a bank account at a bank is easy. Getting a loan is hard as hell. Worthy makes it easy for small businesses to get loans, but it also makes it easy for you to make money off their loans by letting you buy into the portfolio of all the loans they make to small businesses. How you get paid. Worthy loans money to various small businesses who use their loans to buy inventory and generate business. These small businesses earmark collateral for Worthy in case lightning strikes and they can't repay the loans. As they earn revenue, they repay Worthy back with interest. So all of these loans are secured loans. Worthy lets you buy into these via bonds at a fixed rate of 5% to 7%. The interest rates the small business pays above that 7% is Worthy's money to keep. Since Worthy gets paid everything above 5% to 6%, they don't charge you fees. You deposit, you withdraw. You do it for free. Zero fees, but not really, because they keep everything above 7%. And you don't know how much they get to keep. But in a zero interest rate world, 7% is quite nice. Additionally, this is fixed simple interest, but if you choose to reinvest interest, you'll get compounding 7% interest. There are also automatic investment options. You can buy an amount of bonds you specify every day, week, bi-weekly, or monthly. So you can pick, say, 2 bonds a day, or 5 bonds a week, or 10 bonds a month. Up to you. You can enable Worthy to read your debit or credit card transactions, and whenever you have change on a transaction, it'll round up to the next dollar. It'll take that money out of your account and apply it to your next Worthy bond. Each Worthy bond costs $10, so if you do 20 transactions with 50 cents each, you'll have your next Worthy bond earning 7% fixed interest. Who are they? We'll let them tell you. The CEO is Sally Outlaw. Sally is a leading crowd finance strategist, having spent the past 5 years as CEO of PeerBackers.com, helping businesses navigate the new capital opportunities offered through Peer Finance and the Jobs Act. She has conducted business around the world, including 10 years in Russia, and brings her decades of experience in media, real estate, and business development. Sally is also a contributor to Entrepreneur magazine and holds both a real estate broker's license and a Series 65 license as a registered investment advisor. Joseph Dorelli. Mr. Dorelli has over 25 years of experience in public accounting, including partnership and senior management positions, and he has extensive experience in auditing public and private companies, including asset-based lending. He is affiliated with the American Institute of Certified Public Accountants, New York State Society of Certified Public Accountants, Florida Institute of Certified Public Accountants, and is a certified public accountant in the state of Florida. How you start? It's super easy. You go to Worthy's website and click Get Started. You submit your email and password and agree to Worthy's terms. Then, like always, you submit your name, email, address, social security number, for tax reasons. After digitally connecting a secured bank account, you can begin buying bonds. The minimum is 1 bond for $10. Taxes. Interest income counts as income taxes, in general. Same brackets, same rates. So if you pay a 25% income tax rate, you'll pay a 25% interest tax rate. Same thing. Risks, limitations, restrictions. Let's start with the depository limits, because there are limits. If you are an accredited investor, you can buy up to $50,000 in Worthy bonds. If you are not an accredited investor, you can buy up to 10% of your income. But what is an accredited investor? See below. A natural person with income exceeding $200,000 in each of the 2 most recent years, or joint income with a spouse exceeding $300,000 for those years and a reasonable expectation of the same income level in the current year. A natural person who has an individual net worth, or joint net worth with the person's spouse, that exceeds $1 million at the time of the purchase, excluding the value of the primary residence of such person. For risk, let's look at multiple levels. The bonds are secured, backed by assets and inventories. The portfolio you're buying isn't a single loan, it's many loans owned by an organization, and you are buying a bond from that organization that owns all those bonds. The interest from those loans, many different ones, flows to you as interest on those bonds. Since it is a bundle of secured loans, default risk doesn't exist unless small businesses default in massive groups. They are not rated by credit rating agencies. This is kind of a problem, since the accounts are also not insured by FDIC, because Worthy Bonds is not a bank. It is an investment firm, specifically a bond issuer, so it must be registered with the SEC, and it is. Startup costs and fees. The fee is anything that Worthy's loans to small businesses earn above 5% interest. There are no taxes for deposits and withdrawals. You can withdraw at any time. Worthy keeps cash on hand that, theoretically, should be able to handle normal withdrawal volumes. Congratulations on finding a new income stream using IncomeLux. Use the links on the page to get started. Do you want to see all 100 plus income streams that help you boost your income to the levels you and your family need? These include the streams that are limited to members only. We regularly are adding more after using and reviewing them. You will also get to access our over 110 lessons on economics, investment, sales, and marketing, which come complete with 39 plus economic datasets for reviewing the economy and investing accordingly, life calculators to ensure financial planning success, and ebooks that help boost your knowledge. What would all of that do for you? What about your family? Join IncomeLux.com/preview today to maximize your potential.